Hello everyone, good afternoon from Riga. So we're about to begin the webinar for today. And as you can see, the topic for the webinar is going to be things to look for before taking a trade. This is kind of very interesting topic, and mostly I'm doing this webinar for those beginners, for those guys that are just like learning how to trade Forex, or the intermediate guys that still they are not profitable, or so far they are not consistent with their trading. So there are like few things you have to know before taking a trade in Forex or stock market, depending on whichever market you are trading. It's easy for everybody to take a trade, but it's not everybody can easily become a profitable trader. Regan, good afternoon. How are you today? So not every trader can be a profitable trader. So that's the reason why I'm doing this topic. Don't forget to just give us a thumbs up if you like this video, or subscribe to our subscription channel. So let's get started. What are the things you need to know before taking a trade? Number one, the most important stuff which you need to know before taking a new trade, it is the market structure. You got to know what is the what kind of currency pair you want to take. Like, let me just put it for instance right now. I go to USD Canadian dollars. I want to trade the USD Canadian dollars, and this is the 1 hour time frame. What should I be looking for before taking a trade? I need to look at the market structure. What are the market structure? How the currency pair is moving? Is it moving to the upside or is it moving to the downside? That is where you define your strategy. Your strategies come to play too as well. Do you use indicators to forecast the currency market, or do you use price action? Whichever way you use to analyze the currency pair or the stock, then you need to take that into play. That is number one, the structure. Let me just give you an example. This is my the USD Canadian dollars. Before I take a trade, what I do, I go to the daily time frame. Some people usually go to the weekly time frame, monthly time frame, but I usually look at the daily time frame. I go to the daily time frame. I see what is happening. Then I can see the last 2 candles or 3 candles for the daily time frame are bearish. Those are bearish candles that I already determined, I determined that, okay, for the past few days or the past 3 days, the USD Canadian dollar has been trading bearish or has been closing lower. That is my determination. Then what am I looking at? I'm looking at a significant level. You can use pivot points to look at your significant level, but I use a price action. I can take my price level, I hit it at this zone. I put it at that zone which I'm looking at the previous high. That's number one. I already see the level. Number two, for this is the daily time frame. I'm telling you the way I trade the market. Thank you, Regan. So when I look at it, I see that this level is 1.39. That is where I think the price will be moving towards on the daily time frame. I'm looking for the structure. That's the number one stuff which I'm looking for before I take a trade. I'm looking for the structure. I already see that the price is moving downward, or the price is bearish for the past few days or the past few weeks if you take it from this high. So the price is bearish. Then I'm looking for where there's going to be a potential reversal. So then I will determine if I want to enter or not. But that's going to be the last stage. Then I go to the 4 hours time frame. I take a look at the 4 hours time frame. I can already see what the price is moving towards 1.3677 region. That was my previous resistance that becomes support. That is where I am looking. That is the potential target for the USD Canadian dollars. This is the potential target. Most times I usually draw channel because I like drawing channeling, or you can use a moving average, whichever way you want to use, but I usually draw channel. So I hit my channel at this region. If I want to draw more accurate channel, I draw the channel using the line chart. Yeah, I usually use the line chart to draw my channel. Yeah, so I go back to the candlestick formations, so I can see that the price is moving in descending channel. That is bearish since the middle of March, and my potential target is going to be like this region. That's my first stage. So you might be asking me, okay, Wizzy, you already know where this price is going towards. Okay, why don't you just take a position and just ride this move till it gets to 1.3637? If I would do that, I have not put what's it called, the risk reward ratio or the risk management. That is one important thing which you still need to take into consideration before taking a trade. Your risk management, where will be your potential stop loss or your exit. That is what right now. I already see the structure. The price is moving downward both on daily time frame and on the 4 hours time frame. I already see where this price is going. Then what I will be looking at, this is the second part, the area of values. Here's the area of values, where this price is moving towards. That comes to, okay, on the 4 hours time frame I determine, on the daily time frame I already determine. I'm a day trader, so I use 1 hour time frame and 30 minutes time frame to make my decision. So from the 1 hour time frame and 30 minutes time frame, I'll be looking at the area of values where there's going to be a potential reversal and strong movement downward or upward. That is where I come directly to the 1 hour time frame. In case you don't see potential area of value on the 1 hour time frame, you might be seeing it on the 30 minutes time frame or the 15 minutes time frame as well. So you don't just look for a 1 hour time frame. Oh, there's no value area, so let me just leave it or blah blah blah. No. So let's come to the 1 hour time frame. I'm looking at the 1 hour time frame. It's still showing me what the price is moving downward. But do I need to take a position if I want to enter this currency pair right now? I would say no. The reason why, simple. The area of value is the price is kind of in a no man's land. At this point in time, the USD Canadian dollar is in a no man's land. So I cannot buy this market right now. I cannot. However, the best opportunity for me to do is to sell. But where do I put my stop loss and where will be my take profit? That is the risk management. So I already determined that, okay, this price at this point in time, the 1 hour time frame, the price is in the no man's land. There's consolidation right here. Yeah, there's kind of a sharp decline, then there's a consolidation. Okay, there might be the movement might continue like this, or it might make a pullback. Yeah, it might continue like this and go to the position which I said before, that 1.36, or it might just make a pullback here, retest this zone, or even come directly to this previous support that will become resistant and continued movement downward. And if I will put stop loss a little bit above this region, it's gonna be fine. But I'm supposed to already enter the market when this engulfing. Yeah, this is the best place. If I wanted to take a position, this would have been the place which I take my position. Why? Because this bearish candle already engulfed, bearish engulfing candle already engulfed the previous consolidations. If you put your stop loss above the daily high, Reagan King, I would say, for me, I usually look for a swing high to put my stop loss, but it depends on your strategy. But where I usually put my stop loss, either this zone or the zone or the zone. These are the swing high, because that's to show that even when there's a potential reversal, since it's still downtrend, it will not take at your resistance level. When the price make a false move and take out your resistance level, then you know that, wait, hey, it's not my fault that this is the market for you, and maybe there is kind of a potential upside movement that will be happening in the long term. So that is the reason why you need to put your stop loss or take profit in a swing high or swing low. This is my own strategy. This is what I'm using. That does not mean that I'm always following my my strategy 100%, because sometimes you might be very stubborn. You just say, okay, I just see this right now, maybe before it works, okay, I know that, okay, this price is going to continue moving downward, let me put the stop loss here at this 1.3965. If you put it there, there might be a reversal and take you high, but it might still be correct that the price will continue moving. Then this place already form your resistance. But the best way for you to put your stop loss, if you're talking about the USD Canadian dollars, it is this zone, a little bit above this 1.400. Yeah, a little bit above. Even because when the price will come, like make a pullback, it might, maybe there will be a beautiful engulfing bullish candle and make a pullback, come closer to this region and continue its movement down. But if it breaks this upper boundary and this previous mini swing high, then you know that there might be a potential movement to the upside. So that's the reason why you need to put your stop loss or take profit stop loss mostly a little bit above the swing. This is the area of value for me. I know that, okay, yeah, that that's where it comes to the area of value. I know that, okay, the price was consolidating. Okay, let me start from this zone. You already know the price is consolidating at this zone. What are you waiting for? You're waiting for a breakout, because you don't want to trade when the price is consolidating, because you don't know the next movement, whether it might be the upside move or downside. Even when you are trading, even when the trend is bearish or bullish, you don't trade when it's consolidating, because it's kind of two case scenarios that will happen most times. So you wait for a breakout from a consolidation. So I was waiting, okay, the price is consolidating there, okay, let me wait for the price to break out. And what I see, boom, there's a sharp breakout, not just short breakout. I will not jump into this market. I will wait till I see the next candle opened. Then I will enter at this point, put my stop loss at this zone. Yeah, this is my area of value, and the target will be at 1.3687. That will be the target. So this is how it's still. If you want to add to this trade, this is the same situation you need to do. You are waiting after the consolidation, you are waiting, and when there's a break, then you take a position and you ride it downward. And you can see why I said that the target for this USD Canadian dollar will likely be 1.36, because if you look at the left hand side, there's no significant area that will hold, or there's no significant support that will hold this price, or that will prevent the USD Canadian dollars from testing the 1.3600 region. There's no significant support there. So you can see the left hand side corner is totally empty, maybe until it gets to this zone, to this region, which I believe, yeah, somewhere this zone. Yeah, so that is the reason why I said that this price at this point in time is in no man's land, because I don't want to take a position right now, because this value area might provide support for this currency pair and move directly. Or the second reason is because my risk reward ratio is not 1:2. Sometimes I use 1:2, not or 1:1. But if I would do 1:1, then I need to target this zone. I'm forgetting that there's going to be potential support that might prevent or that might hold this price from falling. So finally, I already know this market structure. I already know the area of value. What I will be looking at, how to enter and how to exit the trade. Before you, for new trader or for the intermediate trader or whatever you call yourself, before you take a position, what you need to look for, how to exit. You need to, before your entry, you need to plan your exit too, because you don't want to just jump into the market, don't know where to exit, except you are riding the swing. which is good for those swing trader. But if you are a day trader, you need to look for your exits. So before you look for your exit, you need to look for your entry. So that comes back to this region too. I already say, okay, I want to take a position. This was my entry, as I was saying before, that I was waiting for a breakout. Yeah, I was waiting. The price was consolidating. I'm waiting for the breakout. After the breakout, I will enter. So maybe I enter at this zone or even at this zone. Because still, what I will still tell you is, King, I will say that in short while. So what I will still tell you, sometimes before you take a position, I don't know your strategy, but my strategy, sometimes I wait for a swing low or the previous low to be broken before I will take a position. I will not take a position at this candle that is running because I don't know the end. Sometimes I make mistake, or sometimes I'm so stubborn. At the end of the day, I end up with a losing trade. It's part of the forex market. You win, you lose. You don't win 100% of the time. You don't lose 100% of the time. Sometimes you might even lose three in a row before you start winning. It is normal in forex. So just imagine, I will not jump and take a position while this candle is moving downward, while I still know that there might be a potential support at this region. So that is the reason why I will want the next candle to break this previous low. That is what happened. It broke the previous low. I already got the confirmation, okay, yeah, that the price is going to be going downward. Then I take a position here, put stop loss here, right down to the take profit. And you can, for those guys that is already in the trade, you can easily move your stop loss to kind of break even from here to this zone. Is your break even, then you ride on the profit downward. This is how you do it. And King was asking me, when is the exit? Before you enter the trade, you already know the exit. For me, you can use moving average to predetermine where will be the next support or resistance, depending on which position you are. If you are like short on a currency pair, you need to know the next support level, and you need to exit that currency pair few pips before that next support level, because you don't know if there's going to be a possible reversal and it will not get to that support level where you are targeting. So you need to exit few pips before your support level. That is my strategy. So I already see it. Okay, for the swing trader now, the long-term target is going to be 1.3600. If I want to put if I want to put my take profit, I will not put take profit at this zone. I'll put it a little bit up. Yeah, little bit up at this region. That's going to be my take profit. That's my exit plan. I still know that there's still few pips I'm supposed to take before it gets to the 1.3600, but there are trillions dollars moving the market every day, or euros moving the market. So your money is kind of just a little drop of like a little drop compared to the trillions that is moving. So I want to exit before those big guys come into the market and start messing around with your money. So that's the reason why you need to exit before the previous support or before the previous resistance. Depends on which direction you are trading. So guys, this is the things you need to know before taking the trade. Number one, you need to look for the market structure. It's very important. Look for the market structure. Depending on if you are using technical indicators to analyze the market, fine. Use your technical indicators to know, okay, where is this market going? Is it an uptrend market or a downtrend market? Is this market trading within range? You need to know the structure. If the market is trading within range, what you need to do, you buy the resistance and you sell at the support. This is how it is. If it's kind of moving downtrend or bearish, you sell when it's making a rally to the upside. That is when the market is bearish, and when it's bullish, you buy on the dip. This is how you know the structure of the market. You don't just jump into the Euro USD is going downward right now. Whoa, what is going on? Let me just buy or sell. You don't do that, because you're going to lose your money. Number two, you need to know your area of values. Very important. And the last one, but not the least, is going to be your entry and your exit strategy. Before you take a position, you need to know where you want to exit, and before you take a position, you need to determine how much you want to waste. If you have 500 euros in your account, you're okay, let me spend 80 euros from the or let me spend 100 euros from the 500 euros. What you do, you put your risk management or your stop loss according to what you know you want to risk in order for you to gain what you are, your potential gain, or what you planning to gain. This is how forex market work. So this is the technical analysis for today. Thank you very much for your attention. Don't forget to give us a thumbs up button and subscribe to the channel. See you next week for new webinar. Till then, remain blessed.